Hey there, everyone. Welcome back. You are watching Insight. Right now, we are here with Heather Foster with Foster Financial to talk financial tips. Now, Heather, we just recently had an election night here in Fort Wayne, Indiana. We know that the presidential election is coming up soon. Let's talk about how that can have effects on the markets. I mean, who would have thought? Those presidential elections obviously make sense. They're going to affect the markets.
Of course, with everything, we track the data, right? And the data speaks for itself on what we head into when we go into an election year. And I think what you'll see when I talk about some of these numbers, Tony, is there is a pattern.
Yeah.
That pattern really comes down to psychology, though. It's psychology that we all go through with uncertainty. So heading into an election year in 2024, the markets tend to basically tamper off. They kind of get muted. We don't see typically historically really big returns or really bad returns. It's kind of a muted marketplace typically. Again, we've got a lot of other factors though to consider. We've got, again, inflation that's above normal inflation rates. We have interest rates rising, Fed's controlling the interest rate, a lot of monetary policy stuff going on in an election year. So that's kind of tampering a storyline for a lot of people to say, you know, if we're heading into an election year, and an election year historically the markets are somewhat muted, does it make sense for me to even be in the marketplace? Or maybe I want to again move that money to something more conservative now that rates on conservative money are giving 6+%. So in an election year, given that it's muted, here's the trends. The trends are typically that in the year in which you have an election year, the markets are muted, aka uncertainty. What does uncertainty do to us as the consumers? We generally start to say, do I really want to do anything? Maybe I just kind of freeze. People aren't really buying heavily into the markets. They're not necessarily moving their money out of the markets either. So you see this muted territory. Then the year following an election year, what's interesting, Tony, is if the same president, and this has nothing to do with which side you're on, but if the same president that was in there the prior 4 years gets reelected, the markets actually trend a little bit better historically than if a new party enters, at least in the beginning. So short-term volatility is what we typically see going after the election is actually done. So that last quarter, that last month or so of the year, and then into the following year, depending on who gets reelected or not. I think the story here is comfort, right? If you know what you know, which you know the current president, you know how things tend to go with them, there's a little bit more certainty for the general consumer in the stock market environment than there is if it's a new party. Not saying, though, that we haven't had a situation where a new party came in and we saw a huge rally in the market. That's happened too. But historic trending says in a 2024 year where we're heading into a normal presidential election, we may see a muted marketplace. The following year, the markets tend to do better. But depending on who gets elected, a new party or the current party, that will also typically do a different trending on the marketplace as well. So the other thing to consider on is if there's a sweep in the House and the Senate. So if you are in a situation where it's a divided House and Senate, if you've got divided government, which means divided government means typically not a lot of policies get pushed through. It's actually a more stable stock market environment. So the markets will tend to do better and be more stable for the general consumer if we're in a divided government. However, if we get a sweep, either party, doesn't matter again, whether you're left or you're right, either party sweeping, that means that there could be a lot of policy change. And again, a lot of policy change, there's uncertainty with that. There's not that known factor of, okay, well, maybe a little will get pushed through here and a little pushed through there. There can be sweeping changes in our government and our legislation. And when we see that, the markets tend to, again, have more short-term volatility. So you can see those trends. By and far, most people will just stay in the marketplace. They'll ride this wave because there's typically no massive issues with either election, no matter which way it goes. But it is interesting to see those trends. And to me, most of these trends are about whether people feel good and have that certainty or uncertainty. So leading up to an election, typically a little bit more volatile, a little bit more stagnant on the returns in the market. Then after the election happened, no matter really, again, who gets elected, there's then that piece of certainty. Hey, I at least know the outcome, and then I invest my money accordingly. So just be aware that election years typically, again, depending on how the markets go, depending on if we get a divided government or if we get a sweep in the government, whether or not those markets are going to trend accordingly. Again, I think that a lot of people are just kind of like, hey, if interest rates are at 6%, maybe I don't even want to ride this wave over the next year and a half or 2 years with the election coming up. And we are seeing a lot of people trend out of the markets and into the bond market. So bond markets do have a tendency to do better after election cycles. So the year after, Although, again, the markets do kind of rally back, we see bond markets actually rally more because of that uncertainty as we go into an election year.
All important things to definitely keep in mind as we enter this election year. Thanks so much, Heather, always bringing us those great tips. Appreciate it. Everyone, take a look at your screen right now. Find out more information about Foster Financial. Go ahead, give them a call. Visit their website. And you see right there, book a complimentary consultation. We'll be right back.